not necessarily a new rate cutting cycle. We're expecting minimal forward guidance, moving forward through next year in terms of expectations for the market. And this is really echoing what we've seen for much of the last year. Powell saying he's going to take this based on current data. And we did see job numbers come in less than expected for the market. As far as Stephen Moran goes, he was appointed by Trump, so it's no surprise to see him signal, a larger rate cut, for America, just given like their political mandate. So it's not really a surprise to see him come in aggressive. What was almost more interesting was another potential Fed chair, Chris Waller, did not dissent. So will like Trump look at that less favorably if he is considering Waller.
It's going to be interesting. And you said it doesn't appear that it's another rate cutting cycle. So what about the Fed's language and its statement shaping expectations? We now expect at least 2 more this year. Is that fair to say?
Yeah, 2 more, fair to say. And then, next year, maybe 2, right? They're not setting an agenda for massive rate cuts. And, probably nor should they, right? You do need some of that dry powder in the rate cuts for when there's a real disaster, right? And the government needs to step in.
Okay, so if they're not preparing for massive rate cuts, let me throw you a curveball, because as the Fed governor seats come available and Trump has the chance to place his people in there, this cut today is what the president wanted. Perhaps not as much as he wanted, but are you concerned that the independence of the Fed could be jeopardized and we could kind of stumble into a rate cut scenario moving forward because it's what Trump wants, whether it's good for the nation or not?
Yeah, so I think some of this messaging is politically driven only from the sense that rates are technically restrictive and we're trying to get them back to neutral. And I think there's a debate on what neutral is and how fast we get there. With all the voting members of the committee, sure, could Trump put his hand on the scale? Any government can, right? Yeah. But it's unlikely, especially with what appears to be like the failed ouster of the other Fed governor. Her name is slipping my mind at the moment.
Lisa Cook.
It doesn't look like, it doesn't look like there's going to be, rapid turnover at the Fed enough to meaningfully, tilt the votes.
Now, you said,
now, of course.
Yes. I'm sorry, go ahead.
No, go ahead.
You said that any government can kind of tip the scale, but are you concerned about the Fed's independence moving forward? Because Trump is Trump.
Yeah, I mean, the rhetoric is more concerning than what actually happens, right? So like the rhetoric against Lisa Cook is way more concerning than what actually happened, which is probably her finishing out her term. So, this is a concern. I think it's a new elevated concern in terms of risk. But I don't think it's flashing red here. I think it's flashing yellow.
Now, today, Powell talked about the labor market, which is one of their dual charges that they are supposed to move forward with. And the Fed's decision to ease interest rates kind of tied to that labor market. What about that? Are you concerned about this? Because we've had to go back in and really take a look at the way jobs unfolded, and the initial numbers weren't nearly as good as the actual numbers. And I know that that happens in every administration, but I still have to point out that's where we are right now.
Yeah, the labor market's a huge concern. There's historical data that suggests when the estimates are revised to this degree, it actually signifies a turning point for the economy. So seeing these revisions, just reminds us that history tends to rhyme. And would it be a huge surprise if, implementation of threats of tariffs, is a contributing factor to a turning point in the economy? So that wouldn't catch us completely off guard. So, yeah. Based on historical data, we're really on watch here. And that could mean lower rates going forward, right? That's what the long end of the curve is really waiting for.
Sure, but it's not just the labor market. Inflation, it's been a sticky situation for the U.S. and continues to be an issue for the economy. How do you think this interest rate decision today, as well as the impact of Trump's tariffs, are going to affect prices moving forward?
Yeah, it's hard to see like the housing market light on fire because of a 1/4 point rate cut. Tariffs are the way bigger X factor in this equation. If you ask me,
Absolutely, yeah.
because they're going to be a way more bigger determinant on pricing. And I know the administration is trying to position this not as inflation, but as a one-time price boost. Either way, it hurts the consumer's buying power. And, there was a report out earlier this week talking about how, the top 10% of the economy is doing 50% of the spending. So, there's definitely, cracks that if you look at the aggregate numbers, you might not see them. But when you look a little deeper, there are certainly sore spots in the economy.
Michael Collins, always a pleasure, my friend. Thanks so much for your insight.
Thank you so much. Have a great night.